Hello, welcome, and thank you for tuning in to the results of the Brand Finance Global 500 2022. I'm Robert, Strategy and Insights Director at Brand Finance, and I'll be taking you through some of the key trends, surprises, and of course, announcing the world's most valuable brands this year. If there's one overarching theme from this year's Global 500, it's the ongoing effects of the pandemic. Acceleration in the growth of digital media brands is the clearest trend. The collective value of media brands in this year's table is 31% higher than 2021. Lockdowns persisted across the globe last year, increasing people's reliance on media brands to keep them connected and entertained. COVID isn't the only explanation, however. Media organisations are investing heavily in their brands as they compete in an increasingly congested marketplace for streaming services. There's been intensive investment in the acquisition of content, user experience, advertising, PR, and brand research, helping to strengthen the consumer perceptions that shape brand strength. The tech sector, the most valuable overall, has also grown strongly, with brand value up 19%. A select number of the very largest tech brands, including Microsoft, Apple, and Huawei, are largely responsible. Retail has become the second most valuable sector, overtaking banking. The pandemic has seen an acceleration of e-commerce's share gain from physical retail. Amazon's dominance of e-commerce has meant that consumer spend that was once more disaggregated in the physical retail world has been concentrated on the tech giant. Traditional retailers are showing signs of staging a recovery, however, as they develop their own e-commerce solutions. Allied to the rise of e-commerce is the continued growth of delivery businesses. The collective value of logistics brands is up 23%. Some might be inclined to see logistics as a commodity, with limited ability for customers to distinguish between brands. In truth, the sector underlines how important brands are, even in a business-to-business context. The executives responsible for selecting a delivery partner are signing off significant amounts of money and putting their professional reputations on the line. So they are, if anything, more concerned about brand reputation than a typical end consumer would be. It is therefore just as critical for B2B businesses to monitor and manage their brands as it is for consumer-facing ones. Logistics brands serve as the final touchpoint of customer experience in any e-commerce situation. The brand image of the retailer is therefore closely tied to customer perceptions of the logistics provider that they use. And this illustrates another important point, that it's not only your brand that you should be mindful of. Whether it's the organisations you partner with, the businesses you invest in, or your competitors, having a detailed understanding of brand value is essential. As you might expect, many sectors saw brand values decline between 2020 and 2021. This year, as we begin tentatively to emerge from the pandemic, we've seen a rebound. Travel is a key beneficiary. All airlines in the ranking, as well as Booking.com, have seen their brand values increase, following 2 years of double-digit decline. While the two hotel brands in this year's Global 500 have not only grown this year, but have higher brand values than in 2019. Pharma brands have had a good year too. AstraZeneca, Pfizer, and Johnson & Johnson have received a reputational and financial dividend from the rollout of successful vaccines. The improved recognition and perception of these brands raises interesting questions about their potential applicability in adjacent sectors. Before we look in more detail at some specific brands, let's move on to the main event, the brand-by-brand results of this year's Brand Finance Global 500. As you can imagine, a full countdown of all 500 brands might take a while, so we're going to stick to the top 100. But you can find the full list of all 500 brands at brandfinance.com. So there you have it. Apple has retained its title as the world's most valuable brand. Its value is in fact up 35% to $355 billion, the highest ever brand value recorded in the Brand Finance Global 500. The pandemic has served Apple well, as we've become ever more reliant on technology that enables remote working and learning. Also key to Apple's strong growth has been the sense that the business can move beyond reliance on small devices, and that its brand has broader applicability to projects such as entertainment content, autonomous vehicles, and virtual reality. Further down the list in 5th place is Walmart, which was for many years itself the world's most valuable brand. Walmart gradually fell down the rankings as it lost share to e-commerce and was eclipsed by larger tech brands. But this year it's re-entered the top 5, following 20% growth, as its effort to build out its own e-commerce platform starts to bear fruit. The fastest growing brand this year is TikTok, which has tripled its brand value in the last year. The desire for connection and entertainment during the pandemic has helped accelerate this growth, as has TikTok's success in expanding the relevance of its brand to a wider demographic base. Close to 50% of TikTok's users are now older than 34, thanks in part to sponsorship of the 2020 European Football Championship. The use of such a traditional promotional channel by an innovative media brand indicates the enduring relevance of old media alongside the new. Brand Finance regularly helps its clients to understand what marketing mix is right to help them meet their strategic objectives and build long-term brand value. TikTok is one of many Chinese brands climbing in this year's Global 500. China's rapid economic growth initially helped to spur the development of Western brands, which relied on China for their manufacturing. In the last decade, China has become a centre of global brand creation itself, and Chinese brands now account for more value than any nation other than the United States. One notable exception is Evergrande, which has fallen out of the table entirely. The related uncertainty around China's property market has seen several other Chinese real estate brands lose value this year. One of this year's biggest movers is Corona, Latin America's most valuable brand. Given the potential association with the coronavirus, this result might seem surprising, but it was in fact predicted by brand expert Mark Ritson, who back at the very start of the pandemic suggested in Marketing Week that sales of Corona were likely to increase. The endless repetition of the Corona brand name across all media channels has significantly increased Corona's brand salience, by which we mean the extent to which a brand is considered by consumers at their moment of choice. This doesn't mean that all publicity is necessarily good publicity. Salience can be undermined by negative images and associations. Fortunately for Corona, the distinction between Corona the beer and Corona the virus is clear enough that there has been no material impact on brand image. Corona's increased salience has helped drive increased sales and the brand's future potential. Its brand strength index score is up 5 points, and its value is up 21% to over $7 billion. The world's strongest brand is WeChat. WeChat has an all-consuming relationship with its users, bundling the roles of multiple social networks and payment platforms into one app and one unified brand. That intensity of brand engagement and near universal use in its home market of China is the foundation of a brand strength index score of 93.3. From a relative newcomer to one of the world's oldest global brands. The world's second strongest brand is Coca-Cola, which demonstrates the potential for brands to have enduring relevance, power, and business impact. Thank you so much for tuning in to watch this broadcast of the Brand Finance Global 500 2022. If you would like to know more about the results and how our research can help you add value to your brand and to your business, please don't hesitate to get in touch. Thank you.